Are you ready to rumble with the CRA? Hold on to your hats, folks, because the tax updates coming to Canada in 2023 are going to be a real game changer. And by game changer, I mean they're going to shake up your finances like a snow globe in an earthquake. So grab a cup of coffee, pull up a chair, and let's dive into the thrilling world of taxes. It's going to be a wild ride, but I promise to make it as entertaining as possible, or at least as entertaining as taxes can be. Hi, my name is Kiko. Hope you're doing well and welcome to my channel. But first, let me make it clear that I don't give financial advice. You need a licensed financial advisor or tax accountant for that. Whatever I say is more of info and entertainment purposes only. So back to our video. The Canadian government has announced some big financial policy changes that will affect Canada residents everywhere in the 2022 to 2023 fiscal year. Let's take a closer look. First off, the Old Age Security or OAS program is getting a boost. Retired Canadians can now look forward to an increase in income thresholds, but there's a catch. If you make too much money, you'll have to pay back some of your OAS. Don't fret, it's not all bad news. Here are new income thresholds for the 2022 tax year. Minimum income recovery threshold, $80,761. Maximum recovery thresholds for ages 65 to 74, $134,626. Maximum recovery threshold for ages 75 and above, $137,331. So, if you fall within these thresholds, you're golden. But if your income exceeds the maximum amount for your age group, your OAS could be in jeopardy. It's a delicate balance, but I'm sure you'll be able to manage. Moving on to the Canada Pension Plan or CPP. This program is changing its rules starting in 2023. The new calculations are based on a CPP legislated formula that takes into account the average growth rate of salaries and weekly wages earned throughout Canada. The maximum pensionable earnings under CPP will be $66,600 in 2023, up from $64,900 in 2022. The basic exemption amount remains the same at $3,500 in 2023. Of course, with changes to the CPP come changes to the contribution rates. Employee and employer contribution rates are now 5.95%, up from 5.70% in 2022, for a maximum contribution of $3,754.45. Self-employed individuals will see an increase in the contribution rate to 11.90% in 2023. Up from 11.40% in 2022, for a maximum contribution of $7,508.90. What does all this mean for you? Well, it's simple. The Canadian government wants to make sure that the CPP program remains sustainable for generations to come. By gradually increasing the contribution rates and maximum pensionable earnings, they're providing Canadians with a stronger foundation for their retirement. In addition to the changes in the OAS and CPP, the annual dollar limit for registered retirement savings plans or RRSPs has also increased. For the 2022 tax year, the dollar limit is $29,210, up from $27,830 in 2021. That's a decent increase, but remember that your individual contribution limit is still capped at 18% of your entire income earned, or entire earned income. Now, let's talk about everyone's favorite subject or topic, taxes. Throughout the pandemic, the Government of Canada provided financial aid in the form of COVID-19 benefits. This included the Canada Emergency Response Benefit or CERB, Canada Emergency Student Benefit or CESB, Canada Recovery Benefit or CRB, Canada Recovery Caregiving Benefit or CRCB, Canada Recovery Sickness Benefit or CRSB, and Canada Worker Lockdown Benefit, or CWLB. If you received any of these benefits in 2022, you'll receive a T4A slip with all the necessary information for your tax return. But, and it's a big but, individuals making more than $38,000 in income may have to pay back part or all of the benefits received. If you refuse to pay, the Canada Revenue Agency, or CRA, will keep some or all of future payments, including tax refunds and or GST or HST credits. So it's better to cough up the cash or work with the CRA to arrange a payment plan. Alright folks, we're almost done with our little tax tour of Canada, but we can't end this journey without talking about the newest addition to the tax family, the digital tax strategy. You see, the Canadian government realized that digital service providers were making some serious cash without having to pay much in the way of taxes. It was like they found a magic loophole that the rest of us didn't know about. But not anymore. With the new digital tax strategy, those sneaky digital service providers will finally have to start collecting and remitting sales taxes on their products and services sold to Canadians. It's like the Canadian government is saying, hey, we see you and we want our fair share too. Game on, baby. But wait, there's more. Luxury car lovers, listen up. The federal government has just slammed a new tax on your favorite rides. If you were planning on buying a car or SUV that costs more than $100,000, get ready to dig deep in your pockets. And for those who can't afford it, well, at least you won't have to worry about this particular tax. It's time to pass go and collect your taxes because the Canadian government means business. They're taking on tax dodgers and leveling the playing field for everyone with new tax strategies that are shaking things up. Now, we talk about the tax updates for this year. Now, at this point of the video, you might be wondering what areas in Canada that are not new immigrant or newcomer to Canada friendly. That's why your next step is to watch this video where I'll show you the list of cities where a new immigrant should avoid. Well folks, that's all we have for you today on the tax updates in Canada in 2023. But before I go, hit that subscribe button and stay informed, and don't forget to file your taxes on time. Thanks for tuning in, and until next time, stay curious and keep learning. Ciao!